Hey guys, we're looking at EURUSD today above 12-minute open and above Asian session high. And we can see that this in here is the upmost buy side imbalance, sell side inefficiency that price has created, which led to this highest high in here, taking buy side liquidity above these highs. After this, what we can see is price then turns this candle into a bearish order block. That imbalance is mitigated, and then we can see the RBV entry trigger. Now, if we're going to move the chart a little bit more to the left side, we're going to see that a new imbalance in here formed, so a new bearish fair value gap, and then it's mitigated in there. And again, we can see the RBV entry confirmation, so another sell could have been taken over there. Obviously, stop loss goes above this high. Now, because I was not at my desk while this crazy move has happened, now you could think, okay, now I want to identify if this is the trending move, okay, then any move to the upside is going to be a pullback, right? So what I need to focus on right now is when will I have a bullish fair value gap that's going to be part of a bullish pullback, which is here, okay? When will that be invalidated to the downside? Price then goes up, taps that bearish fair value gap, mitigates it, and then gives us our two entry candles, which is the RBV entry confirmation, okay? So sell is taken there once the second candle closes, and then you can actually benefit from that move, even though you're not catching the move from the very top. Before we jump to the next trade example that was taken today in the RBV community, I want to take a moment and thank Hanko Trade for sponsoring this video. A few reasons why I trade with Hanko Trade is, first of all, because this is a true ECN broker. Their spread is low, like starting from 0 pips, especially on the main pairs. The maximum leverage that you can get with them is up to 500, and also a minimum commission of $2 for every one standard lot. They also have multiple trade accounts, and also if you guys are interested to open an account with them, you will find a link to join Hanko Trade, and don't forget to claim your promotional 100% bonus, which is basically Hanko Trade's most prominent promotional offer, matching your deposit with a bonus of 100%. So if you're going to deposit any amount of money, then you're actually going to get double into your account size. So guys, if you want to join Hanko Trade, make sure to check the link in the description of this video. Based on the same idea, if we take a look at gold, or if we didn't get an entry confirmation at that top over there, okay, which in this case we didn't, because this was the candle that was turned into a bearish order block. This is the imbalance that formed it. And in here, you can see that the RBV entry trigger would have been these two candles. But the second candle, it's ridiculously long. So it just wouldn't have made sense to sell that low, okay? Even though, yeah, you're going to probably say, yeah, but look, if you would have sold it there once the second candle closed, you would have gotten a lot of pips. Yeah, that's true, but you don't know. When you are facing that kind of situation, you don't know whether after such a long bearish candle, you're not going to actually have a pullback, and all this moves to the upside, you're going to be in drawdown. Okay, so it's better to wait. Maybe you're going to get a pullback, and then in here, wait for two new entry candles, and at least you're going to get an entry at a slightly higher price. Okay, so in here, you have no confirmation whatsoever whether price is going to continue to go lower or just make a pullback, put you in a drawdown, or just simply just reverse altogether. Okay, so it's not smart to sell right there when you have such large entry trigger candles. So if you are still looking to benefit from this bearish move, you just have to think in terms of, okay, what's the trending move and what is the pullback? So definitely such a great bearish momentum makes us believe that the trending move is going to be to the downside. And then every bullish move that we're going to see, it's going to be actually the pullback. Okay, so if we're just going to do like a quick mapping in here, if this is the trending move, then this move to the upside is the pullback. This is another trending move. This move to the upside is the pullback. This is another trending move, pullback, trending move, pullback, trending move. Okay, so now the idea is like this. After every pullback starts, you want to check what bullish fair value gaps are forming on that pullback. And then if you have a pullback that goes like this, so these are bullish candles, okay? Bullish candles, bullish candle, and it goes like this, right? And at some point you see that a bullish fair value gap is formed in here. So that's the BISI, right? And if I know that this is the pullback, then what I can do is I can wait for bearish candles to start to form, breach through this bullish fair value gap, invalidate it, okay? And on this bearish move, I want to see bearish fair value gap, right? So once price taps into that fair value gap, I can then look for the entry confirmation. So in here, if this is the pullback, this move to the upside, if that's the pullback, then we cannot see any bullish fair value gap on that move, okay? And then price starts to resume the trending move to the downside. And then we have another pullback, no bullish fair value gap on that move. And then the bearish move is resumed to the downside. And then another bullish pullback, right? So on this last bullish pullback, we can see here a bullish fair value gap, which is then invalidated with this bearish move. What's the bearish fair value gap that we see here? It's that one. So once price mitigates it, you want to look for the RBV entry confirmation. Okay, so let's go here. Just show you guys a close-up. Okay, so this is the bearish fair value gap. Okay, we mitigated in here, and we have these two entry, like some sort of entry candles, but it's not really because the second one doesn't close below the bottom wick of the first one. Okay, so then we're still waiting for the same fair value gap to be tapped or for a new one to be formed. So a new one would be formed how? Price would have to go lower and then make a pullback with a bullish fair value gap here, which will then be later invalidated with a bearish fair value gap, and then we wait to tap into that fair value gap, and then we're going to sell there. Okay, and if that does not happen, then we simply wait for the last bearish fair value gap, which is this one, to be tapped into again. And if we can get those two entry candles, this one and this one, okay, so two consecutive entry candles, second one needs to close below the first one, right? So in here, our entry would have been once the second candle closed, which is right there. So that would have been, let's see, the price at which this would have happened. As a first take profit, we're aiming for 20 pips, so a $2 change. So that would be 18.95. So from 18.95.30 to 18.93.30. And it went to 18.92.90. Okay, so more than 20 pips. So TP1 would have been around here somewhere, and then you secure your stop loss at break even, and then you're being taken out. And right now we could actually witness bullish setup, an RBV counter bias setup. Why? Because we're below 12 a.m. open, below the low of the Asian session, and we're already starting to see some nice moves going on in here. Okay, so yeah, let's see how this is going to unfold. So guys, you can see in here the trade that I've already taken. It gave an entry confirmation during that long bullish candle over there. So that was taken. So this is me just taking profit, and I'm not going to keep a partial because the profit on this one is pretty good. And we're also approaching some milestones to the left side of the chart that I'm thinking that it might actually reject from there. So a new entry was taken here for the RBV counter bias setup. The first entry was based on this imbalance, and then it actually went a little lower into this bullish imbalance, and then it gave us our entry confirmation around here. You saw that I've taken that already off previously, and now what we can see going on is that we're creating new bullish imbalances. Price taps into those, and then we have the entry confirmation. And then in here we can see a new bullish imbalance, price taps into it and then continues to go higher. New imbalance, not tapping into that, and now we have a new imbalance in here. Now, I think it's time for me to take something off from this, even though it didn't go for my regular 20 pips. But if we look to the left side of the chart, we're going to see that we are starting to reach some milestones that I would have otherwise seen as take profit level. So we have buy sell liquidity above this high. We've already taken that out. So, and then a little higher, we have this bearish fair value gap here, which is probably going to be mitigated at some point. And then we have also this one. But before that, I really do want to take some profit off in here. So yeah, I'll just go there and take that position off. And that's it. And yeah, a little bit later, this is me just wanting to scream because I didn't leave a runner, which is something that I usually do. You guys know that I always leave a 10% runner at least, but I don't know why today I didn't leave a runner. So my first entry was here, okay, and I took something off. And then my second entry was I think it was around here somewhere, okay? And I took something off, I think around here, okay? In the previous video, actually in the previous slides of this same video. And after I took the second trade over there, which didn't go to my regular 20 pips, but yeah, I just thought that, oh, well, I think it's going to reject from some PD arrays from here, from the left side of the chart, and I just decided, so this PD arrays were like this buy side liquidity here and the bearish fair value gap over there. So I just decided to close everything, right? But yeah, guess what? After I've closed all my positions around here, price decided to go for an additional, let me check here on my computer. So it decided to go for an additional almost 100 pips more to the upside. So yeah, this is just a lesson for me and for you also. Always leave a runner. Don't ever close your entire position, whether you're going to leave like a 10% runner or a 5% runner or even a 1% runner from your initial lot size. It doesn't matter. Just leave a runner, because otherwise you're going to feel such a big pain in the brain, because you could have benefited from a move that was a lot bigger than what you actually took. And it's honestly, it's not really about the additional profit that you could have made, because I've already taken care of that, right? Of that part. When I take 20 pips partial, or when I decided to take something off or the entire position off, that's where you actually pay yourself as a trader. However, what you're doing through leaving a runner, you're paying or you're satisfying the technical analyst in you. It's that personality within each and every one of us that wants to have longer trades in terms of pips. Okay, the trader in us wants to make money so that we can actually pay the bills. Okay, so earning money is the priority that the trader in us has. The technical analyst in us, however, has a different priority, which is catching larger price moves that are going to give us lots and lots of pips. So the idea is to prioritize that personality in us that is aiming to earn money, to pay for the bills, to fund the lifestyle and all of that stuff, okay? Because ultimately that's the reason why we want to trade, to earn more money, to have more free time for the stuff that we really like and for the stuff that we really enjoy. But however, you need to understand that there has to be a a good synergy, like a good harmony between the trader who wants to earn money and the technical analyst in us, who is the technical guy, the IT guy that spends a lot of time in a dark room and that makes all the analysis, and that spends a lot of money and a lot of time on documenting, marking charts and learning Forex courses and all of that stuff. So that guy inside of our head, we also need to keep that guy satisfied, okay? And just leave a runner, because that personality doesn't care how much money you're going to make on that 100 pip move if you leave like a 5% runner from your initial lot size. That personality doesn't care that, oh, I could have made so much more money if I would have left my entire position open. No, prioritize paying yourself fast, but also prioritize leaving a runner, so that you will not later on reach to the point where you will psychologically sabotage yourself because you're leaving too much money on the table. Not too much money on the table actually, but too many pips on the table. Okay, so remember, leave a runner. This today was a lesson for me. Alex, don't ever dare not to leave a runner again. And you guys can see what happens when you don't leave a runner. So yeah, take care guys. Hope you enjoyed today's video and talk to you next time. Bye.